Welcome back to Alpha Index, where we decode the principles of prosperity. Today, we're tackling a question that echoes through the halls of modern investing. Is the S&P 500 the only investment you need? It's a bold claim, often whispered by gurus and championed by legends like Warren Buffett. But is simplicity truly the ultimate sophistication when it comes to your financial future? Let's go beyond the headlines and dive into the enduring wisdom behind this powerful index, the S&P 500, a masterpiece of simplicity. First, let's acknowledge the brilliance of the S&P 500. It's not just a collection of 500 companies. It's a dynamic, self-cleansing mechanism that represents the economic engine of the United States. When a company falters, it's out. When a new innovator rises, it's in. It's like owning a fractional piece of the ongoing ingenuity and productivity of American enterprise. For decades, it has delivered consistent, inflation-beating returns, making it a cornerstone for many. Its power lies in its elegant simplicity and its inherent diversification across sectors. The case for only the S&P 500. The argument for making the S&P 500 your sole investment is compelling. 1. Diversification by default. You're instantly diversified across 500 companies, reducing single stock risk to near zero. 2. Low cost. S&P 500 ETFs and index funds boast incredibly low expense ratios, meaning more of your money works for you. 3. Time-tested performance. Historically, it has proven to be an exceptional wealth-building tool over the long run. You are betting on the enduring capacity for innovation and growth in the largest economy in the world. 4. Behavioral guardrail. Perhaps most importantly, it removes the temptation to tinker, to chase hot stocks, or to time the market. Behaviors that often erode returns. It forces a discipline of patience, the nuance, when simplicity isn't enough. However, to embrace true wisdom, we must also explore the nuances. While powerful, the S&P 500, by itself, has certain limitations. 1. Geographic concentration. It's fundamentally a bet on the U.S. economy. While many S&P 500 companies have global operations, your investment is still tied to the regulatory, political, and economic landscape of one nation. The world is vast, and growth opportunities exist beyond U.S. borders. 2. Market cap bias. The S&P 500 is market cap weighted, meaning the largest companies have the biggest influence. While this reflects economic reality, it means you have a heavy concentration in tech giants and megacaps. You get less exposure to smaller, potentially high-growth companies that might be the titans of tomorrow. 3. Asset class concentration. The S&P 500 is 100% equities. Stocks. A truly robust portfolio often incorporates other asset classes like bonds, real estate, REITs, or commodities. These can provide ballast during market downturns, offer different return profiles, and further reduce overall portfolio volatility, especially as you approach retirement. Your risk tolerance and time horizon are crucial factors here. 4. No small cap or international exposure. If you believe in the long-term growth potential of emerging markets, or the explosive growth that can come from innovative small companies, the S&P 500 alone won't capture that. The Alpha Index takeaway. Principled investing. So, is the S&P 500 the only investment you need? For many, especially those just starting out, or those who prioritize extreme simplicity and long-term passive growth, the S&P 500 is an incredibly powerful foundation, perhaps even 80 to 90% of a portfolio. It embodies the wisdom of diversification and the power of compounding. However, for those seeking to optimize further, manage specific risks, or capture a broader spectrum of global opportunities, a principled approach might involve adding a total international stock market index fund for global diversification, incorporating a total bond market index fund to temper volatility, particularly as you age, Potentially, a small allocation to small cap value funds if you believe in their historical premium. The deeper wisdom here isn't about finding a single magic bullet, but understanding your own financial philosophy, risk tolerance, and time horizon. The S&P 500 is a profound testament to the power of broad market investing, but it's a tool, not a dogma. Ultimately, the best investment strategy is the one you can understand, stick with, and allow to compound over decades. And for many, the S&P 500 fits that bill perfectly. If this deep dive into investment principles resonated with you, please give this video a like and share it with someone who's navigating their own financial journey. And for more insights into online money making, hidden wisdom, and investing, subscribe to Alpha Index and hit that notification bell so you don't miss our next video. Ultra music fades in.